Traders, what's going on? Jamie Saettele here. It is your midweek strategy webinar, middle of February, February 15th, 2017. Let me know that you can hear and see. And once I have confirmation of that, I will get going. All right. Decent levels going on right now with dollar pairs. Can really see it. Oh yeah, don't worry. We are going to take care of copper, gold, oil, nat gas, silver. I like to look at those at the end of the webinar, but we will look at them. I do want to start by going over some dollar stuff here. So we've actually hit some pretty good levels in euro, right? So if I go to the weekly, we came off the big overhead, right, at 108.20. We've actually gotten into what today we call weekly reversal support. Now, I don't think that the big dollar decline is really going to get underway until March. Remember, we have this that we are following, and it was written about earlier in the month. I did a piece on SB in one of the updates about the sequences, right, in the dollar rally, and they happen to match up very well, and just so happens that when it turns down, it would happen to be when seasonality also turns down for the dollar. So not going to be, I don't think, just go long euro and, super duper forget about it. I do think there will be opportunities to trade really both sides of the dollar, as we've kind of been trying to do. So with the euro, that means this is the chart from last night, just updated with a little bit of stuff here, just highlighting 105.63 as a level. So we had listed in the update, I was really looking for 105 just because of the slope, but 105.30 bold line is the weekly reversal support. You have the 618 down here too, 105.26. I know Mike talked about that or mentioned that this morning. But this rally that we've got here off the lows, I'm looking for some sort of failure up around the week opening price, which is 106.27, and that would be in line with the median line. Okay, so I am looking to trade actually from the short side into 106.26, but would be looking to buy it back and go long in the 105.60s, 105.70s. If we were to make it up there, in fact, you actually would have a 618 there anyway. So essentially have 2 points that probably want to be, trading for the rest of the week. We are finally getting some movement. It seems like lately the markets don't really open until Wednesday. I mean, it's obviously not true, but you don't get good movement, it seems, in FX until later in the week. And these two levels just really clean and clear. 106.20s, 26, 27 in particular. 106.20 is the low down here as well. And then again, 105.68, 105.63. 105.68 is actually a square root level. It's the first one up from the yearly opening price. The volume is 105.63, and yesterday, okay, that was right here. You can see that volume level at 105.63. So again, that gives you a good a reference point to essentially buy into. Okay. and you can look to buy into that level. It'd be best, in my opinion, if you did get up to the weekly opening price first and pulled back from there. But either way, it's a good looking level to trade into. And that was a big volume level. You can see that the volume level yesterday, and that was right when her as in Yellen, when her comments, came out, her prepared comments came out to the Senate Banking Committee in the semi-annual testimony that's called Humphrey Hawkins. But yeah, we saw some really big, that was the biggest volume level of the year, actually. In fact, not that much smaller than the ECB level back, in December 8th. And you can see how big that level was. That ended up being huge resistance on the way down. So yeah, 105.63 in spot, very big level it does look like right now. And since we've turned up, you can look to trade that on the long side with a stop under here. Okay. So that's euro. Pound. So good slope support this morning that I sent out. I'm wondering, this is the 20-day average, right? And so we've kind of broken it, and it's basically near 125 now. 125, 125, 25 is still your area for resistance. And I noted the possibility this morning, it seems like a pretty good environment for it. Had noted the possibility that we get a triangle in the wave B position. What I mean by that is that you would get, this would be A, B, C, and then kind of get a little more tightening up, and then get the final spill lower, and then it's off to the races higher. So if that is actually the case, then things will clear up considerably, or I should say they'll get messy considerably before they clear up considerably. So just consider maybe trading range in cable, for the next, it could be another week. We kind of had an inkling that we might go into a tighter range of sorts, and the levels are pretty good, right? 125.25. Yeah, Mohammed, can you give me the? Yeah, sure, man. So why don't we do this? Why don't I just get rid of everything in the chart, and we'll go through it. This way. Okay. So with cable, a few things. This is RSI here. Okay. A few things with cable. This rally, 1, 2, 3, 4, 5, I think we can all agree that that's a 5-wave rally. Mohammed, you let me know if you have problems with that, right? But to me, that's a very clean 5-wave advance off of the low. Okay, 1, 2, 3, 4. Okay, so you're seeing this as A instead of 5. Well, okay, we can call it A or 1. That's fine. But either way, you do agree that there's 5 waves up from the low. Yes? Oh, there's 5 waves up from this point here, is all I'm saying. Okay, that's kind of that's really what I'm getting at, basically, is that we do have, this is a 5-wave advance. And within that 5-wave advance, you have wave 3. It's also okay, well, here, I'm going to go through how I see it. So I have a 5-wave advance here. Okay. Oops, that's 3. And one of the biggest reasonings for that is that wave 3 itself is actually also in 5 waves. Okay, that's 1, 2, 3, 4, 5. So that's the biggest reason to call this 5 up. Okay, 1, 2, 3, 4, 5. Okay, so we have that in place. Now, here's another thing that you can do. RSI can help you count the waves, right? And how does that work? Well, what are some of the typical, on a 4-hour chart especially, some of the typical things that you get at the peak of wave 3 is the momentum extreme. Well, guess where was RSI during wave 3? 74.37. Wave 3 of 3, 73.88. In other words, you have your 2 highest RSI levels at the third of third and wave 3 peaks. So that is also a positive as far as it goes with treating this the way the way that I'm treating it here. What's another thing that tends to happen? You often get wave 4 RSI bottoms down near 40 but above the 30 level before it gets so-called oversold, right? We actually remember we were able to buy this, literally low ticked it and took it up here and trailed the stop to 2609 after or before BOE, right? Well, that happened. What also is typical at the end of a fifth wave movement, right? Oftentimes you see end of 5, you often get a divergence, right? Now this is all kind of hindsight BS, right? As far as going back and saying this, but you know what? This actually tells us where we've been, and so we can get a better idea of how to count moving forward. So we have all these things in agreement, the momentum principles, the 5 within wave 3. Label this as wave A, right? Wave A, you actually get your first oversold reading. Okay, that tells you that you've at least started to a sideways trend and perhaps even a downtrend. What's next? Well, after A comes B, and you can see that we've actually been, if we would have continued to fall off a cliff here, we would have said that we're already in wave C. Well, that didn't happen. And instead, we've actually turned up again before oversold. And we had a good slope line there too, but we've turned up before oversold, which tells us that we could be in a triangle because we're not registering any oversold or overbought levels above 70 or below 30 on the chart. So that's why I'm willing to call this potentially a triangle in wave B. Now, there's obviously several different interpretations. You could have A, B, C. You could go up higher in wave C. Okay, this could be A, B, and you can go higher in wave C. Based on where the dollar is right now, that would necessitate a much larger drop in the dollar than I think we probably get, but it doesn't really matter for trading purposes because we can, one, look to this as a level to sell into, okay? 25.28 is where you would get this leg up related to this leg up as a 618 relationship, and that's common in a triangle, okay? So literally be wanting to sell into 25.25 or so, which is also, if you recall, daily reversal resistance. Be wanting to sell in 25.25 with a stop above 25.50. Very tight stop. Because if we go above this, then I think the chances are probably decent that we end up getting up to 26.10. Okay. So while we're on cable, anyway, does that make sense? At least as far as how I'm rationalizing the wave count, Mohammed. I hope that helps make sense. But the RSI comments kind of help in this regard as far as, putting the the characteristics in place, right? But while we're on this, okay, Mohammed, you're having difficulties breaking up the mark on wave one. So this right here, you're having problems with. Okay, you're always going. Here's what I want to. Don't spend like a ton of time like counting. Like you drive yourself nuts if you're trying to count every little wiggle in the market, right? It's not going to work out too well. Do this though. Look at an hourly. Here's an hourly chart of closing prices. This is actually how R.N. Elliott did it himself. He only looked at hourly closes. That way you get rid of spikes. It actually starts to stand out pretty clear on this one, right? You have a wave one higher, wave two, okay, 1, 2, 3, 4, 5, wave four, which also stops at the former fourth wave, okay, and then wave five. But don't, if you're trying to count every single little wiggle in the market, you'll just, one, you won't see the forest for the trees, if you know what I mean by that. You'll get caught up in little details that don't really mean anything. And two, you'll just go nuts. You'll be like, well, this can't be that because it doesn't have 5 waves in it. And well, it's like, you know, you got to look at a little broader. But while we're on this cable chart, I do want to oh, we got dollar yen now coming in to watch this 114 area. We're right there. Right here at 114. Looks like gold just jumped a bunch while I'm doing this webinar. So what's going on in the Twitter world? Anyone saying something crazy? Oh well. Anyway, there's the pound and euro. So I hope I'm gonna move away for a second from the British pound wave count because I want to get back to the special report, kind of the update to a special report that we looked at last week. Okay. Excuse me. Or over the weekend. I published over the weekend. So we'll bring up cable. So when people look at, you're looking for similarities in markets, and they happen, obviously. Markets, they repeat themselves and everything, right? Never exactly, but they do tend to repeat themselves. The characteristics tend to be the same at certain times. So a lot of people have been comparing the lows here to these lows, which is fine. I just looking at it, I thought it just seemed to jump out a little bit more at me that actually the double bottom that you've got on the weekly here, or as a possible double bottom, I should say, you kind of want to match it up more with a double bottom. And this into 1989 really looks like the most obvious example of it. So if we overlay it, right? Take the overlay, and I've already got it copied on here. You can see that basically since Brexit, it's been pretty spot on as far as the general idea of, when you're going to get highs and lows. I mean, you can move it around to shift it back a week or two, right? But either way, it does say that your next big low for cable is probably either next week or the week after. Okay, and if I go to the daily bars, you can see it like so, right? So if we go from here, you have the week, it's a little later in the month. If you go from here, which does seem to line up a little better with the short-term stuff, then maybe it's, late this week or early next week. So with cable, just kind of wanted to address that quickly, and really why we came up with that as a viable alternative or a viable comparison. Okay, so let's move on. Dollar yen. You can see dollar yen really big spot. We're actually putting in, looks like we're putting in a little reversal day here. I said 114 is a short-term level, and we've just hit that. So you could get a little bit of a bounce here. I do still think that the better place to be a buyer, if you're going to be a buyer, is probably down near 113.45, which is actually the weekly opening price. It's also these highs over here, and of course, the trend line that was just broken. So yesterday we'd be just below there, just below yesterday's low, would put us below 113.25. Okay, so that's where the better support is. And we actually can do the same thing here as far as a short-term trade idea that we did with Euro, right? And that is the volume stuff. So yesterday's volume, okay, big volume. Again, one of the bigger ones of the year. It looks like it's actually the second biggest one of the year. So we have the volume level there. And that would be the 10 a.m. hour. So that would be the 10 a.m. hour yesterday, which puts you at 114.40. And that, if you know, basically an overnight or a bounce from near here, right, gets you, if you get 114.39, 114.40, that would actually be an area where I'd be willing to, sell into it actually for, a drop down into 1320s or so. So very similar in terms of setup, if you will. And whoa, dollar yen's taking a diver. Should we just buy it right here? Get a little bounce here. Let's see where the US dollar is. The index, are we getting close? Are we at support yet? Not quite yet. It looks like that support is a little lower. Again, more like 12.338. Okay, so let's continue on with the majors. Aussie. So we're long Aussie right now. We're able to get triggered this morning on that dip. Every time Aussie dips, it comes right back with a rip, and might finally be on our way to the 77.80, 77.90 region. So this level right here, 77.08, is actually big in its own right. It is with the weekly reversal level. But again, if we just broke through this, let's keep it simple, right? Market goes up, market dips down into former resistance. Okay. Market goes higher. Market goes sideways. Market dips into former resistance. Market goes higher again. So this will eventually give way to probably a deeper pullback at some point. But, as long as it's going on, I don't really see why not be long. And you have a very obvious target. So the expansion of this range here, in other words, the range target is 77.85, right? It's the measured target. The measured target for this, for example, was 77.06. It was just reached. But 77.85 we said was the target for this measurement, right? Yeah. Well, you have the high from the election, 77.77, same spot. Seventh square root level is 77.90. And you know what the trend line is from 2016 is right there too. So, you know, all things in a dream world here, we are long, but we stay long and sit through employment tonight, which comes out, and then Aussie employment is whatever, does what it does, and Aussie blows out through the top and gets up into the target, and then we short resistance and it falls apart, right? How's that sound? But all in all, let's just deal with what we've got right here, which is we are trying to break into the bigger level, which I think would be the one that maybe gets us on the short side. So we'll see. Either way, it is what it is right now. You know, if you want to know, so yeah, when I wrote last night, this is a 60-minute chart, right? So last night in the update, I wrote that we had this huge volume level in Aussie yesterday, right? Right when the Yellen comments came out yesterday, you had huge volume levels like across the board. Okay, the Aussie one was ginormous. It was also the largest. It was the largest since, you can see in 1 hour, since FOMC from December. Those really big volume levels like that, okay? Doesn't necessarily matter the direction. It's more like what happens after it. So in this case, you can see that we had this huge volume level and the market went right back higher. So that gives you confidence to basically just trade against this level, because if you break that level, it's a big deal. Okay? And could have actually gotten a entry about 10 pips better than we did. I talk about high daily closes, or, you know, daily reversal resistance support, and the weeklies. Well, it works on hourlies too, and it works on hourlies in this recent Aussie market's a very good example of the kind of market it works in, where you have a really tight range, right? And you're trying to go with the trend, but it's really hard to do because every time it turns over, you think it's going to fall apart because you're a big resistance. Well, you know, who cares, right? It's just, you're going to have your stop where it is, and if it gets hit, it gets hit, and just take the leap and do it. Well, in this case, the hourly low close was 76.38. This morning's low is 76.37. So you can see how that works. I put it at 76.50 just because within the range, 76.50 was just a little better, but that is for future reference, just kind of a little education, whatever, on how you can put entries into tight ranges with tight stops in an attempt to go with the direction of the broader move. Okay, which in this case is clearly higher, but you know, you're going to fall apart probably at some point, so that's why you want to have tight stops. Moving on to Kiwi, really kind of the exact thing that was written last night. We don't have much to change there. Mohammed's asking about Aussie yen. We will definitely look at Aussie yen. I actually have that written down to want to look at Aussie yen. So with Kiwi dollar, this is the short, again, with Kiwi, and you know, we're coming off of a big spot as far as the resistance is concerned. So there's two areas to watch for resistance. 72.38 is a big one, right? The high from FOMC, and also all this support back here. There was lows and everything like that. Given that, you know, Aussie might want to break out a bit higher, or is trying to, then 70, it might be 72.60 might be the level for us in Kiwi. That is where the upper parallel is. It's also the big volume level from RB and Z. Okay, so RB and Z, you can see like where we've had all these big volume levels for other markets. We actually haven't had that yet, or we haven't had that since RB and Z, because RB and Z, that was the event in the Kiwi market. So, yesterday's Humphrey Hawkins, prepared remarks from Yellen were actually generated what I would call important events in almost all the markets except for pound and Kiwi. Okay, CAD it did not either actually, but it did in Swiss francs, it did in yen, it did in euro, and of course, and it did in Aussie. We just went over that. But so in Kiwi, the big level still to pay attention to is 72.60, right? That's really the spot to watch, and you can see that was a huge one. Kiwi market obviously is not big, doesn't trade a whole lot, but you didn't have, that was the biggest, it was even bigger than December FOMC. In fact, it was the biggest, it looks like volume-wise, since back in September of 2016, which was right kind of during the blow-off. All right, dollar CAD, and then I will be pretty much done with the majors, I guess, at that point, and we can move on to crosses, including Aussie yen. So with dollar CAD, this thing it's pretty annoying, don't you say? I mean, we have this big support here. I feel like it's kind of a waste of time to try to trade it. There's so much other stuff going on. The good levels in euro and yen and Aussie and Kiwi and pound, right? But it just looks like an attractive spot, 32.68 to go to. If I put on the 240-minute chart, could you have a more immediate bearish outcome? Sure, you could. This fork, I kind of dismissed it at first, but we are trading on the 25 line for the most part. But here's the thing too, this market actually, you do have the upper parallel up at the same area, 32.68, but it's kind of got to get going because all this stuff intersects basically this week, and then it's over. All right. So a move from here to 32.68 into tomorrow or Friday would be obviously quite a move. So I'm not real sure that's going to happen. But yeah, I guess I'd keep it on the radar. Yeah, no real plans to mess with Aussie at this point. It's just it's kind of doing its own thing, and I'm happy to let it do whatever it's going to do, and we can move to it once it wants to figure itself out. All right, let's go to the crosses at this point. Actually, let's look one chart of the dollar, and then we'll go to the crosses. Yeah, good averages in Kiwi too coming up. So the dollar, if we scroll ourselves back, right? We've been looking or thinking that if the big resistance is going to register at some point, then it might actually be on this stuff. So that's obviously still a good deal higher for the dollar, but this short-term channel really playing out pretty nice, right? And the next spot here is kind of to look at support for this. So it's a little lower, 12.338. And again, if you get down there, it probably puts you euro up at 105 or 106.20s, pound maybe near 25. And then hopefully Aussie tags the target. But watch that area for support. Okay, that's the U.S. dollar index. 12,309 is the monthly open, but okay. What next? Yeah, Mohammed says maybe oil down so CAD will follow. Yeah, we'll see. Oil's been acting okay lately. I've thought it was going to try to really crash earlier, like a week ago. Excuse me, like a week ago, but it did not, and it's held up. So I don't want to get too much into that right now. Again, just kind of let it figure itself out because it's in a very choppy range. Crude might try to break out to the top side before it comes off really hard again. Just a thought. We'll see. Okay, so let's go to Aussie yen, which is, I'm glad you asked about that. It's actually a very interesting market to look at. So Aussie yen, so here's a weekly chart, and I'm going to put on moving averages. One of these moving averages is a 200-week moving average. People ask, like, what the hell is a 200-week moving average? Look, I don't know, but it does work. So, you do get some pretty big turns on it. I've got some of them circled here. Is it immediate? Not all the time. It can be, but it's a big level. And the trend line off of the highs from 2013 and 2014, those parallels right here cut through some big levels, and we're getting close to them. So the 200-week average is 89.60, lines up very close to these lows back here. So my thinking is that you probably are going to get into this area, 89.60 area, not very far away. In fact, we were above 88 just this morning, 88.15. So my thinking is that Aussie yen gets up into this 89.60 region or so, and that's kind of when you want to be turning bearish. Okay, and that might be the case for Aussie in general. These moves, these risk-on moves higher, they will be interrupted with extraordinarily sharp declines that are brief but sharp. And I think we're probably getting close to that happening. So, pay attention, 89, 89.60 especially, maybe even 90. But these levels, general area, obviously we'll try to watch for signs up here that you're failing. And if, it'll be time to maybe put on a short position or something, or at least trade dollar yen from the short side and maybe Aussie dollar from the short side as well. But until you get up to there, I'm not too worried about, being, on one side or the other as far as Aussie and yen are concerned. Euro Aussie, of course, pretty much almost the same thing, but the opposite, is in, Aussie strength, right? Lower in Euro Aussie. But same chart we had from Sunday's update. Basically, I think you want to watch for a poke beneath the low from 2015, which is 36.78. That would be an area where I would be on alert for a reversal of sorts, and then would be looking back to the median line. And that would, so those are the two levels to pay attention to. Okay. It could be something like that too. If you ran up into there, let's see if you get a parallel off of that where it would put you pretty close. Mohammed watching the 140 area to short it. Yeah, I mean, Pretty much, right? I mean, this median line is just below 140 actually. It's 139 80s basically. But you can see if we put on this really steep channel, it actually coincides with the levels that we're looking at anyway. Right? So right down here, little low in Euro Aussie, high in Aussie dollar. What do you say? And then a nice rebound, correction higher. It takes us into resistance before we go a lot lower again. So this is a pretty clean looking chart, Euro Aussie is. Let's see if we have some square root levels to pay attention to. So 136.94 is 7 square roots down, which basically the same thing as 77.90 in Aussie. So yeah, I'm liking that area for some sort of a low, 36.78 or so. Okay, so there's Aussie yen. Look at Euro Aussie, Euro yen, and pound yen. Just kind of want to look at some of the yen crosses. So we put the idea up that this morning on Twitter is basically watch at these big levels are coming into play, right? The levels from last summer and last fall, right? The 138.80 region, 138.80 region ended up providing pretty good support, I'd say, down here. The next big level on the upside is the recovery high from July after Brexit, which is 43.20. So keep an eye on 43.20 in pound yen. 143.20 in pound yen is also would be the trend line from the high, or you can't really say it's a trend line yet because it's just 2 points on the, but you get what I'm saying. Connect in the December high and connect in the January high. Or the secondary high in January. The actual January high is actually the first day of the year. So watch for resistance at 43.20 for pound yen. Euro yen. Good. Euro and yen are somewhat correlated at the moment, so probably have better things to trade yen crosswise, like pound yen, but good support. There's a good fork here. You do have a really good looking level. The month opening price is 21.72, and you have these lows over here in the 21.60s from December. Okay, so I would pay attention to that region on a short-term basis. Don't really have anything to work with pattern-wise here. It's kind of an expanding, diagonal type of deal. I'll have to look back and see if we can find anything similar on the charts. I'll do some work on that later. I have on my notes here, and this is actually from last week, and it's still the same thing. Kiwi, more willing to short. Aussie, more willing to buy dips. I mean, it's kind of the name of the game right here until we do get an actual behavior change in the Aussie dollar. One more cross, Euro pound. Euro pound, actually the 200-day average is just below here. And we do have a slope line down here as well, very close. And this might if we put in a spike bar yesterday, right? A reversal bar yesterday. Um, Actually trading unchanged on the year at the moment, but this might be, if we're basing down here for support, which it is good support, my thinking is that you more kind of want to err on the short side of cable than euro. So whether that's through pound dollar or euro dollar, versus euro dollar, or pound yen versus euro yen. So, and you can see that in the pound yen chart. Pound yen has a better looking, steeper resistance to trade into, or a little better resistance to trade into, whereas euro yen's a nice level being the month open and all, but I don't think the level is as or the patterns as promising, I should say. And finally, pull up the Dow, and then I'll go to the commodities. So with the Dow, I think we're going to go top up at 2133, 21,332. That would be the breakout from here. But it doesn't mean you can't pull back before then. I think that any sort of pullback before then will end up being bought, and that the big top is going to be up here. It's really just the channel, pay attention to that channel, and that is really that for the Dow. Okay, let's move on to the commodities. We have questions on copper. Okay, copper, gold. It's basically all the metals, nat gas, crude. So yeah, metals and energy. All right. So I'll start with crude oil real quickly. So crude oil, I don't look. There's no change here to anything. Like this dominant slope that we have is this. Okay, and the market continues to abide by it. So as far as crude's concerned, we have what we call a raised floor, where we found support last week on the reversal and continued higher. And so where your support to watch for now in crude oil is this level right here. It's the close of that day. That's the low daily closing price. Okay, and that is 52.36. So 52.36 is your level. Muhammad's saying, isn't this a rising wedge? Yeah, it can be. It could, but it could be a lot of things. Like this could be a triangle too, that you just bust out of, right? So you have to look at it this way. What's more important isn't necessarily here. I'll show you how we look at stuff here. Hold on. Okay. So what's more important right here isn't necessarily the this. Okay, you want to take it like, where's the trend? Okay, there's a trend line pointing up. Okay, what's this doing? That works too. All right, but this is the idea with forks, is that it gives you the angles and the levels to work with, and that you try to trade in the direction of the trend, but at support and at resistance. So in this case, the median line or the midpoint of the channel was resistance. In fact, it was resistance all of December and the first day of the year in crude oil. Well, since then, yeah, at that point, I'm looking for crude to come off. It won't do it. It just won't do it. So what we end up with now is look where the last low found its level. It found its last low at a higher level. That we call it a higher floor, okay, on a higher level. And that reversal bar, the close of that bar, which is 52.36, is where you want to watch for support now. And your risk is that low, 51.20. All right, that's it. It doesn't matter about being right or wrong, okay? It's about where's the risk, where's the opportunity. In this case, you have a reversal bar higher within an uptrend. And yeah, you better use a stop on this because if it gets below here, then it's probably going down to 49. But this is how I'm looking at crude right now. Eventually, it will definitely come off hard, okay? And it has to because there's essentially you have a massive COT long position in the specs. So at some point that will be washed out, but it doesn't mean you can't go for another leg. Okay, it doesn't mean that. What else? Okay, what about nat gas? Oh, one more thing. Let me go back to this crude oil chart, or let me look at crude oil. Let me look at volume on this. Yeah, I mean, it's just gone dead. Look at the weekly charts, the weekly chart here. Look at that. Up, dead, another leg up, and then down. That's what I'm thinking. All right, let's move on. So we'll go to nat gas. One more thing on crude. Sorry to keep doing this. So we said 50, I say 52.37 is the support point. Resistance point here, I mean, look, at some point, I think you do need to go higher. So I'm going to say the median line, which is probably up near 56, 57, near 57 at this point. Nat gas. So I think we just hit support in nat gas, it looks like. And yep, there it is. We look at this chart every webinar. And guess what? We just hit support. Conwall, we just hit support, my friend. So this is support from a trend line. And when you're coming into support, your question is what's the likelihood of this holding, right? Or breaking? And you can't really quantify it. It just doesn't work that way. But in this case, you had the 200-day average there, or you have the 200-day average there, and you have former resistance levels, and you have the fact that nat gas, the channel level up here, resistance-wise, you had actually gone through it, and that's a strong, that's a characteristic of a strong market. So the implication being that when you pull back, you're either going to find a higher floor or you're at least going to hold support. So my bet here is that you do hold support, okay? As far as where you're going to encounter initial resistance, And this also can be a bullish thing here. Hold on, check this out. Okay. So here's another, this is something else that's quite bullish looking on nat gas. So you see how this fork here, you see how the upper parallel was like perfect resistance, right? You can see how you were finding support on the median line and the upper parallel was resistance. Well, notice that the lows, the last couple of lows are actually at higher levels on, on the plane. In other words, you're not getting down into the support like you're making a higher level. That's, again, it's like divergence. So this is a positive. Yeah, right, Leon, I hear you. I'm just saying, like, from a short-term trading perspective, you do need to have risk points and invalidation levels. And, this is a good opportunity here with a tight invalidation level. But asking to whose point here? Oh, Conwall's point, asking, where about levels for nat gas. So your levels up here that you'd want to pay attention to, probably going to be this line. It's essentially just a trend line, okay, off the high here and the high here. So it would put it higher. I would actually go more aggressive. I'd go here. So I'd put about 315, 314, 315 as your first resistance area. But just like I said, I talked about, the thinking that when you come into this, you're going to hold it because of the action up here. When we get up to this level, I actually think it'll probably break through it because this is not a very strong downtrend. It's quite weak. Right? You're holding a higher plane. So, but that's where I'd look for first level. So support, just hit it yesterday. Resistance up here, 315. But my inclination is that it does break higher. All right, let's go to the metals. We'll start with copper, which has been the most interesting one probably. So, copper really did a number here last week, didn't it? What was that? That was Friday, I think, where it just went like, it was up like 5% or something. Might be finally in for a pause in this. I don't know. It's here. This, I guess, this is a pretty good example of the dangers of counter trend trading if that's what you're going to do after a big breakout, right? So like the things to do here, the setup is once you break out, then to watch for supports on the pullbacks at the defined levels, which we had with the blue lines. Okay. I still think that's the way to do it. Obviously, if you are tempted to try to trade short down from here into those levels, that's one thing. But events like this last week obviously might discourage you from doing that. So copper, yeah, I mean, I think that you probably moderate a little bit or at least go into some sort of range, but it's very difficult for me to sit here and say that I want to be bearish copper right here. Let's see what the volume looked like on copper last week, if it was nuts or not. It was pretty big level on Friday, but not really that big. You do have, there's a weekly volume level to look at. The close of that week. So that was in November. And that's actually it's pretty much that level right here. Close of that week is 250.40. So that's still your support. That's your big support. Okay. There you go. So that's your big support. Do have resistance here. I think you can get down to support. So Conwall, you want to know where resistance is? My guess is that it's at 277.65, which is last week's close. That was the high volume day on Friday. And your support would be down at 250.60, which is the high volume week close from 11.7. And they both line up with very good looking slope levels. Okay. This chart actually, and I put this out on the, yes, it is. Mohammed saying on divergence on RSI. It is. The thing is, of course, that's one way to look at RSI. The better way to look at RSI is bigger picture stuff like this. So what are you seeing here on RSI? You had all these tops fail near 40, and then you held, or 60, and then you held 40 a couple times, and then it went absolutely nuts on the upside, right? Well, guess what? That's going to happen to old drawings on there, a lot of crap. That's going to happen to Aussie at some point too. You had all these 40 or 60 levels hold resistance, and then guess what? The last couple of lows, they hold near 40, at least above 30. So might not be ready yet. You might need one more dip in this, but eventually this Aussie chart is going to look like this copper chart. Okay, you're going to get one of these. It's going to happen at some point. And we have, over in the long-term charts, I do have this stuff written down as far as where to look or where we think that could happen. March and June are historically the two best months for the Australian dollar of the year. Okay, so obviously coming up on one of those pretty soon. Anyway, that's the copper stuff. All right, silver. Silver, we have the 200-day average here actually. Sometimes it's resistance and support, sometimes it's not, right? This is a log chart, remember, and this is the fork I've been working with for a long time. We've had this copper chart. I mean, it's kind of a beautiful thing. You haven't had to change the lines on the copper chart for a long time. Here, hold on. Okay. So everything seems to be working within on these angles for the most part. This trend line I have drawn here just because I want to know if it works. It probably won't, because the level that's probably going to be better for actual decent resistance on silver is probably going to be, see where these circles are. It's probably going to be that line, which lines up with big highs in 1846 and 1837. So that would be where I would really focus my attention on silver. I don't know if we go straight there from here, but that to me is where I'd be looking. One thing that is somewhat concerning on a very short-term basis is the fact that you have silver making this new high yesterday, and gold is absolutely holding up. And Mohammed says buy dip. Yeah, so that's you're getting ahead of you are ahead of me, I should say, on this. Yes, that's what I would be getting at as far as, because if we have this big level up here, 1837, 1846 as our spot if you will, to maybe look for a peak of some sort in silver, then it would make sense to look for supports, because if you fall from here, you'd want to get bullish to get into that level. So since we are working with a log chart, we actually want to draw forks in, and that looks to be pretty good, doesn't it? Yeah, it's coming off of here. It is a pretty clean looking chart. I would, the place I would look at, I think for silver is actually, I'd be looking closer to this median line, and you would have a trend channel fairly close to there as well. So the median line here is not going to be very far from the 20-day average, and you can see that the 20-day average, during really strong trends like last year, you're not really going to hit it. During these kind of like what I would call intermediate, like kind of choppy trends, like start and stop, a lot of times that's the average that works as support in a market. In a way, it's a better market to trade because it's a little more methodical, right? Than just having that straight line move. But pay attention to the 20-day average. This is a 4-hour chart, so it's 120 periods. But when you've dipped into it during this up move, it has held it. So watch it again, and watch it during, or at, I should say, this at this median line, which you can see really is the last time we really went higher, quickly, back on the 27th of January. It consolidated on it, and since then we've had higher floors. Okay. So that's something to look at. I just want to get some of this. I want to try something else real quickly. I want to see what this looks like. Not that, because that's too steep and that's not going to do anybody any good. But this right here. Okay, so that's pretty good too. Okay. So we are looking at essentially the same thing on this, where all this resistance is kind of up around the 75 line. Your support, same thing. Okay, really watch the 20-day. I'd say near 1740. I'd mark it as support. I'd mark resistance as about 1840. I would mark a stop level at about 1720. Okay, and let's move on to gold, because the gold-silver relationship is always interesting. And you can see that gold, we talked about what the big, we got to get off log. This is not a log chart. The big resistance is 1240, 1250, right? Gold's peak so far back here on the 8th, 9th of February, where silver made a new high yesterday. So I'm kind of worried that you are going to pull back from here in gold, and silver might pull back with it and go a little higher, but gold may have made a peak for a bit here. Okay. So, the last few legs up on silver might be on fumes into that 1836, 1846 region. With gold, continue to follow this stuff for resistance. It might be a little higher, right? But it's still the 1240 area, 1250 maybe. Okay. There's a lot there. The weekly chart really shows it well too. If I show you the weekly chart of gold, so these long-term averages can work really well, and all right. So this is a weekly chart. I want to put up just to show you a crap. It's not showing it. All right. Let's go this way. Let's try this. All right. 1 week. Here is a 200-week average. We hit it last week. Okay. If I show the futures chart, which goes back further, you can see the importance of that average, right? So the big peaks on it until we eventually really broke out back 17 years ago, and we just hit it just now. You also have a 55-week, which is just above it. So 1240, 1250, still resistance. And Mohammed actually did bring up the gold-silver ratio. Yes, that's one that we actually like to look at a lot around here. I actually look at the silver-gold ratio, and you can see that we've had a huge change in behavior on it. And one thing that I like to show people that I showed a while ago is the Aussie Kiwi exchange rate with silver and gold or gold silver, whatever. Right? So a rising silver price relative to gold happens in an inflationary environment. Well, so too typically does a rising Aussie Kiwi exchange rate. A lot of people would not put that together, but that is a interesting comparison or phenomenon or whatever you want to say. All right, I've gone a little bit over, but that's cool. I'm going to wrap it up here and pay attention to the big levels in some of the majors, right? As we move forward here throughout the rest of the week. We've got good levels in euro, 105.63 and 106.20s, 30 maybe. Dollar yen, it came off 114 just below as I started this webinar. It's already back to 114.30. Actually, watch resistance at 114.40. That's the high volume level from yesterday. Aussie, we just hit a big level at 77.05. I'm hoping that it goes higher because we're long and we're looking for that final leg. And then Kiwi, you did no. Well, I don't know if you missed Kiwi, Pooja. We did look at it. We're basically it's the same here as it was before, and that is watch for the 72.30 area. But 72.60 is even bigger because that's the huge volume level from RB and Z. Okay, so that's really what we are looking at. We do have a divergence signal here on Aussie, which is kind of disconcerting. Okay, you can see that the divergence signals are the magenta dots, right? And it did happen at the last couple of big peaks. You can get false signals, of course, too. Like into the tops last year, we had some went into tops, had some went to tops, and then rolled over. So we'll see. All right. So that's it for me for now. And everyone have a great rest of your week. And thanks for coming to watch today. All right. I'll get this up and archived ASAP. And talk to you guys later. All right. Bye.